Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2025 question number 34. Look here, there is a requirement is journal entries. What is this? Write the double entries. Double entries required to record the following. There are following two guidelines. We must write the double entries. Double entries means credit and debit. Okay, look here. Post the total sales journal of the firm to the general ledger. To the general ledger. Post the total of sales journal of the firm to the general ledger. There is no VAT related transaction. The above information. Look here, there is no VAT related information. Therefore, you know what is the sales journal? Look here, this BO settle the total amount payable to Amal. Okay, let's see. The total of the sales journal. Okay, what's the double entry? There is no VAT related transaction. Therefore, sales journal means related to credit sales. Therefore, what's the double entry? Double entry is sales credit. Sales credit. Sales credit. Debit to debtor control. Debtor control. Debtor control. There is no VAT related. Therefore, this is the transaction. Double entry. We must find what are the amounts of this. Let's go to the amounts. We must focus to look here. Credit sales. No, we must find the total credit sales. Why? Sales journal related to credit sales. Therefore, we must find the total credit sales. Total credit sales. Credit sales. This is the inventory sales. Okay, inventory sales. Inventory sales. Inventory credit sales. Okay, focus this question. Look here, we must find the credit sales. Okay, look here, this is the information there. We must find the sales, credit sales. Look here, first one, this is the onion cultivation business. Okay, and selling business. Purchased onion seeds for 800 on credit from Amal Seeds. Amal, a seed supplier. Purchase, there is no related to sales journal. We must find credit sales. Okay, purchased the harvesting machine for 2,300,000, 2.3 million on credit from Siripala. There is a purchase of harvesting machine. There is no related to sales journal. Okay, let's see. Paid 100 wages for employees of the firm. This is the salary payment. There is no related sales transaction. Therefore, let's see. Look here, sold onion stocks to wholesale traders for 980,000 on credit, for which 200 cash was received subsequently. The balance amount is due to in 1 month time. Look here, there is a sales, sold onion stocks to wholesale trader for 980. Okay, on credit. There is a sales, the transaction credit sales 980. Okay, this is occurred. After that, look here, there is a 980 was sales. Okay, sales, for which 200 on cash, 200 cash was received subsequently. Firstly, they say sold goods 980 on credit. Firstly, this is the first transaction, 980 credit sales. Look here, we must find credit sales now. First, this transaction, firstly they credit sales 980. Okay, there's a credit sale. After that, they said that what is this, for which out of 980, okay, 200, for which 200 cash was received subsequently. After the credit sales, 200 cash was received. There's a 200 cash receiving is a after transaction. Therefore, credit sales we must identify firstly 980. Okay, this is a subsequent transaction cash receiving. Okay, let's see. There's a credit sales is 980. Okay, the balance amount is due in 1 month time. Okay, look here, another sold an onion stock to Amal 280 on credit. There is another credit sales. Okay, agreed to set off. This is the past transaction. Subsequently situation is said agreed to set off this amount against a part of the amount payable for the onion seed purchase. There is a subsequent transaction how this amount should be set off. Look here, agree to set off. Set off means finally eliminated. Eliminated means the credit sales no at the receiving the cash amount, they said how this cash amount was received. Look here, agree to set off. There is a receivable no, set off this amount against a part of the amount payable for the onion seed purchase. Therefore, this is the set of transaction. Set of means the paying or receiving transaction. Therefore, this is not related to sale. This is sold is first transaction. Therefore, the credit sale we can identify. What is this? Sold an onion stock to Amal for 280 on credit. This is the transaction ending. Okay, this is a credit sales. We can identify 280. Okay, let's see the another question. We find the only credit sale. Subsequent transaction we can find the another information. Why we only find the credit sale after the transaction was impacted to another transaction, another information. Okay, let's see. Paid the balance amount due to the Amal. This is the paying amount to trade payables. Okay, at that time we can only identify credit sale as 60 1260. This is a double entry. Sales credit 1260, debtor control debit. Okay, we write the answer in the sheet. Look here, is a transaction 1260. There is 1000 amounts. Debtor control debit. Debtor control debit. Sorry. Debtor control debit. Credit to sales. Sales credit. This is the double entry. What is the another requirement? Next requirement, to settle the total amount payable to Amal. We find the Amal. Settlement. There is a settlement. Settlement means closing the total amount payable to Amal. We must find the Amal. Okay, let's see. Amal. Firstly, look here. First transaction is related to Amal. Purchased onion seeds 800 on credit. From Amal, a seed supply. Therefore, we use the double entries. No, purchase the onion seed 800 on credit. This is the credit purchasing. What is the double entry? Purchasing debit, creditor control credit. 800. Okay. What is the double entry? A transaction, purchase debit 800, creditor control credit 800. I use the creditor control trade payable account. I write trade payable control account. Trade payable control account. This is your creditor control account credit. I write credit short. Purchase. This is the amal. Amal related transaction. This is amal. Amal is payable to amal. Okay. This is the purchasing. There is a credit balance to payable. Next transaction related to amal. Look here. Amal. Purchased the harvesting machine for 2,300,000, 2.3 million. Credit from SIRA. There is SIRA transaction. There is no related to amal. Next one. Paid 100 wages for employees of the firm. This is not related to amal. Sold onion stock to wholesale traders 980 on credit, for which 200 cash was received subsequently, a balance amount due to the 1 month. This is not related to amal. Fifth one and sixth one is related to amal. Look here. Sold onion stocks to amal. Look here. Sold onion stocks to amal 280 on credit. There is a credit sales. Sold sales onion stock to amal 280 on credit. Okay. And agreed to set off this amount against a part of the amount payable to for onion seed purchase. You know, this is the information. Sold onion stock to amal 280 on credit. There is a credit sales. No, we find the transaction double entry. This is the E transaction. No, E. Look here, E. Okay, E. There is a credit sales. No, at that time sales credit 280 debit to trade receivable control debit 280. You know, look here, there is a payable amount 800 to amal payable, and again there is a sales transaction occurred. There is a 280 was receivable, trade receivable from amal. There is another receivable. This is the payable 800. There is a receivable 280. This is the receivable. This is the same person amal. This is the payable. Okay, payable. There is a payable 800 rupees, and there is a receivable from sales amal 280. They said that they like to set off. Look here. They said that agree to set off. Set off means receivable and payable set off, cutting. Why? There is a payable to amal and there is a receivable from amal. Therefore, they agreed. Amal and we agreed to, there is a payable to you, there is a receivable from you. Therefore, we can set off this. Set off means cancel this. Therefore, agree to set off this amount against a part of the amount payable for the onion seed purchased. Look here. based on the purchasing, there is a payable. Based on purchasing, the based on purchasing, there is a receivable based on sales. Therefore, there is a receivable from Amal. Therefore, we payable 800. Part of this, what is the part? 280. We can cut it from payable 800. There is a payable 800, no. There is a receivable 280. We can cut it. Okay. Set of the deduct it. Okay. We can deduct the set of this 280. Payable of 200 and payable of 800. We can deduct 280. Therefore, there is a set of, finally, they said that each transaction paid the balance amount due to the Amal. Okay, let's see the transaction. Look here, we firstly identify the set of transaction. What is the set of transaction? Receivable. This is a set of transaction. I write this. What is the double entry? This is a set of. Set of means cancelling. Trade receivable cancelling, we short to credit for receivable. Therefore, I write the set of transaction. This is set of trade receivable credit. Okay, trade receivable control credit. Which amount? 280. Set of means cancelling. Payable cancelling, debit to trade payable 280. Trade payable control debit 280. This is the transaction. Therefore, we focus to trade payable shorten. This is the set of trade payable debit. Okay. After that, we can enter this amount to trade payable debit. Set of, this is a trade receivable short. Trade receivable. The final transaction, they said balance amount. Look here. The paid the balance amount due to Amal. Look here, balance amount was, there is a set of means the deduction, no. There is a deduction. The total payable is 800. There is a deduction from 280. After that, what is the balance? 800 minus 280, 520 is a balance amount we must pay for Amal. What is the transaction? Cash paying. This is a set of cash paying. Another is cash paying. Cash paying. What's the double entry? Cash credit. Cash control credit 520. Debit to debtor control. Sorry. Trade payable control debit 520. This is the double entry. How can this is the what are the requirement of that? This is finally done it. Okay, they request us what is the double entry to settle the total amount payable to amount. Settle means closing. There is a closing means there is eliminated of total payable. Total payable eliminated and shorten are this short and this short. Why? Total trade payable account debit 520 cash. You know, there is a settlement is this one. Settlement is closing. Why? We payable to trade payable is 800. The settlement is this one. There is a two shorts, 280 and 520. Therefore, I can create the transaction like that. We can find the one transaction. Look here, there is a trade payable debit, no? Trade payable debit, total 800. Okay, therefore I debit trade payable in one shot, payable debit, trade payable control debit, which amount? 800 totally. Okay, after that I credit to each account. Trade receivable control credit 280. Cash was credit, cash control credit 520. This is the summary of the settlement. Okay, total trade payable control account debit. Okay, the settlement credit shots are vary. Why? The cash was paid to 520. The set off from trade receivable, therefore trade receivable control account credit 280. This is the answer we can write. There are three shots: trade payable account, trade payable control, trade payable control debit 800, credit to trade receivable control credit 280, credit to cash control account, cash control credit 520. This is the double entry, 520. This is the transaction journal entries. The next question is easy one. In next video we meet question number 35.